Arista Networks has delivered one of the most impressive returns in tech over the past decade, a staggering 3,649% gain. Yet, despite this incredible performance, the stock is currently trading almost exactly at its fair value. So, what's the story here? Is the AI networking boom already priced in, or is there still room to run? Today we are going to go through our 7-step analysis process to understand what's really happening with this cloud networking giant. And most importantly, whether this stock still represents a good investment opportunity at current prices. But before we dive into the analysis, let me quickly mention our sponsor for today's video, Forecaster.biz. We'll be using their comprehensive financial data throughout this analysis to get the most accurate picture of Arista's financial health and future prospects. And the future looks very bright. This company builds the networking infrastructure that powers AI, cloud services, and other high-speed platforms, things that are essential in today's world. So let's dive into the analysis. Looking at our company dashboard, we can see some truly exceptional numbers for past performance. The 5-year total return stands at an impressive 1,008%, meaning the stock has increased more than 10 times in just 5 years. But the 10-year total returns are even more remarkable at 3,648%. That's the kind of return that can transform a portfolio and change lives. Now, let's head over to Forecaster to get a deeper look at what's driving these incredible returns. When we look at the price chart here, we can see this remarkable upward trajectory. But what's really important is that this isn't just hype. If we look at the sales and net income graphs, they are on the same trajectory as the stock price. The fundamentals are backing up the price appreciation. And if we look here at the performance metrics, we can see that they are having great results not only in the long term, but also in shorter time frames, like 3 years or even the past few months. This consistency is exactly what we want to see from a quality company. Looking at our past results score on the dashboard, Arista Networks gets a perfect 3 out of 3, which reflects this outstanding historical performance. But as we always say, past performance doesn't guarantee future results. So let's examine who currently owns this company and whether smart money is still buying. Individual insiders own 17.3% of the company. That's an excellent amount, showing management has significant skin in the game. This is well above our 2% threshold and indicates that leadership's interests are strongly aligned with shareholders. We have one super investor currently owning shares of this company, and it is François Rochon. This stock makes up 1.7% of his portfolio. Our investor score shows 2 out of 3. Solid, but not exceptional. The high insider ownership is great, but having more super investors interested would push the score higher. Looking at our financial health metrics on the dashboard, we can see some truly impressive numbers. Return on invested capital makes it a strong 26.2%. This is the kind of efficiency that creates long-term shareholder value. Net profit margin is outstanding at 32.6%. And now let's look at share buybacks. And here we see 45.5% showing in red. This means they are actually diluting existing shareholders. However, when we look at the shares outstanding history graph, we can see that for the past 8 or 9 years, the dilution has been relatively small, but it's still something to monitor. Now let's examine their debt situation. Years to pay debt metric shows 0, which is exceptional. Looking at our net debt history graph, we can see that Arista actually has more cash than debt, meaning they have a negative net debt position. This is incredibly healthy and gives them significant financial flexibility. Let's go to Forecaster to get an even closer look at their balance sheet. If we navigate to raw data and then balance sheet, we can see something remarkable. No short-term debt, no long-term debt at all, and in the last 4 years, cash has been going up at an incredible pace. This company is a cash-generating machine. But if we want to take a wider perspective and understand just how strong this company really is, let's go to Forecaster's AI agent and check out the qualitative scorecard. And we can see that they have an incredible score of 9 out of 10. They are in the same group as the best companies in the world. Overall, our financial health score is 2.3 out of 3, with the only concern being the share dilution. Let's keep on moving to our growth metrics on the dashboard, and this is where Arista Networks really shines. Revenue growth shows an exceptional 28.2% compound annual growth rate, and we like to see this above 10%. This is the kind of growth that gets investors excited. Free cash flow growth is even more impressive at 41%, and earnings per share growth comes in at an outstanding 39.3%. Looking at our revenue history graph, we can see a consistent upward trajectory with accelerating growth in recent years. So what's driving this exceptional growth? Well, Arista Networks is perfectly positioned in several high-growth markets. First, the AI revolution requires massive networking infrastructure. Companies building AI models need to connect thousands of GPUs efficiently, and that's exactly what Arista's products do. Second, cloud providers continue to expand their data centers globally, and Arista is a key supplier to many of the largest cloud companies. Third, as more companies move to software-based ways of managing networks, Arista benefits because its products were built for that type of system from the start. Our growth score is a perfect 3 out of 3, reflecting this exceptional growth across all key metrics. Looking at our dividend section on the dashboard, we see that Arista Networks is not paying any dividends. Instead of paying dividends, Arista is reinvesting all profits back into growing their business. And this makes perfect sense at this stage of the company's life. Now let's look at our valuation metrics. Our DCF analysis shows 3 scenarios. In the low scenario, we predict that the growth is going to slow down. In the medium, we anticipate that this slowdown will be much smaller. And the high one predicts that it will keep its recent momentum. With these estimates, the intrinsic value in the low scenario is $161. In the medium scenario, $200, and in the high scenario, $256. Now, when we apply our 30% margin of safety, we get $112 in the low scenario, $140 in the medium scenario, and $179 in the high scenario. The current price is $143, and our average intrinsic value with margin of safety is 144. This shows a current upside potential of just 0.5%, meaning the stock is trading almost exactly at fair value based on our analysis. Now let's check what Forecaster shows. They have 4 different valuation models available with an average fair value of $133. But if we look at the DCF model specifically, it shows a fair value of around $175, which is very similar to our high scenario. This is exactly why I really like using Forecaster. It can either give us additional confidence in our valuation when the numbers align, or if the results are significantly different, it can be a sign that we might be missing something important in our analysis. And if you want to analyze companies yourself and explore all the tools that Forecaster has to offer, like AI features for analyzing earnings calls, tracking insider transactions, following politicians' trading activity, and much more, then use my affiliate link in the description and enter the code BOLD10 at checkout to get a 10% discount. Thank you, Forecaster, for sponsoring this video. Our current valuation score is 2 out of 3, indicating that this stock is fairly valued but not undervalued. So we can get an exceptional company at a fair price. Of course, if we believe that the AI boom is going to last. When it comes to the overview, we can notice that only the dividend score is below what we like to see, which gives us an overall score of 2 out of 3. Arista Networks is clearly an incredible company. They have strong competitive advantages in a growing market, impressive financials, and spectacular growth driven by AI and cloud trends. However, here is the challenge. The market knows all of this too. You are paying a fair price for a great company, but you are not getting a bargain. So the question is, are you comfortable paying the full price for this level of quality? If you believe AI infrastructure spending will continue to accelerate and Arista can maintain its leadership position, then current prices might be really nice. But if you prefer having a margin of safety in your investments, or you are worried about a slowdown in data center spending, then you might want to wait before adding this to your portfolio. If you enjoyed this analysis, you should definitely check out my video on NVIDIA, another company at the heart of the AI revolution, but with a very different business model and valuation profile. Thanks for watching and see you in the next one.